Well, hi traders, Chris from the research team here at Pepperstone. Now, I want to quickly announce that Blake and myself will be taking a short 2-week break from the trade-off. Blake's going on a lads trip and I'll be going out to Dubai the following week for an event out there. So we'll be taking a short break, which is unfortunate because we do love doing the show and we appreciate all of you guys watching us at home as well. So we'll be taking a short break, but do leave your comments about how you're seeing the market or any questions that you have, or reach out to Blake and myself or even Michael Brown on Twitter, or X as they call it these days. But in the interim, I just want to leave a short message, a bit of a tidbit about what I'm seeing on the markets, because I think it's really important, the message that we're seeing from gold, silver and crypto, and also to an extent the equity market. And that message currently isn't being shared so much by the bond market, but if we were to see that message being shared by the bond market, I think it could have quite powerful ramifications for global markets and volatility more broadly. Now, the move we have seen in gold, silver and crypto, or certainly in the precious metal complex since the 20th of August, has been prolific. It's been frustrating for people who've been wanting to buy pullbacks because those pullbacks just haven't eventuated, and it's just been a one-way ripping trend. We've seen Bitcoin trade up to 126,000, just above that level, and gold's traded to 39.76, up about nearly 20% since that 20th of August spike, swing low that we've been seeing, and silver just getting shy of $49, up about 32% in that ripping move that we've been seeing. Now, what is the message that these classic debasement hedges have been trying to say? And I think that's a really interesting one. Well, of course, you've got all these momentum funds that have been pushing the price up. They're not really caring about the fundamentals. They've just been pushing it up through institutional involvement, who have been reallocating capital to these trades and increasing the weighting in their broad portfolios. CTAs chasing, and all these other funds that have been just increasing their allocation. That's been one factor, but there's more than that. There's got to be something that's more than that behind the scenes. And I think what we're seeing there is really about the fiscal position that they're looking at. Okay, we've just seen a new leadership change in Japan, where the new prime minister is very much sort of going alongside this sort of Abenomics at a time when the economy is already pretty strong and inflation's above expectations, or where the target is. And you've got issues in France and other trying to create a budget. But I think it's really about what we're seeing in the US. Now, the fiscal situation in the US has improved this year through tax receipts and income receipts that they've been seeing, as well as the tariff receipts that they've played. And they've collected about $300 billion in tariffs so far this year, or in total receipts this year. And that's pulled the fiscal position into a more improved situation. That deficit as a percentage of GDP has come down to about 6.3% of GDP, as I say. But if we look at the future, now, I think it's important to say that Trump is making a lot of noises now that a lot of these tariffs that have been collected may be looked to stimulate and buy votes ahead of the midterms next year. He's promised support for farmers, rebate checks for different households, and also offsets for companies and industries that have been affected by tariffs. Instead of saving that capital to reduce the deficit in the future, he looks like he's going to try and buy votes ahead of the midterms next year. Now, considering as the US economy is already running just tracking above 3% of GDP, we've got loosest financial conditions in the US that we've seen in probably since about 2002, if we look at it on a broad basis. And we can also see in this situation that the Federal Reserve are actually cutting into those loose financial conditions, which people are talking about bubbles, but the Fed are actually cutting and easing into that situation, which is a very different dynamic. Now, the other factor is we're looking at is that the IEEPA tariffs, which go into the court ruling, the Supreme Court makes a judgment call, or at least the case for whether they're going to be illegal or legal goes to an orals situation on the 5th of November. And then the Supreme Court could make it a decision coming through in the weeks or going by the end of the year on whether or not they're deemed illegal. If the court does decide that they are illegal, I think that could throw huge volatility into financial markets in a time when everyone is very, very short of volatility. We've seen that in where implied volatility is on a cross asset basis, or where implied volatility is very rock bottom levels. And therefore, if you were to get that, I think it could cause a huge shock. People wouldn't be able to price risk around that. And people would be asking, what does this mean for tariffs, which has been Trump's major bargaining card? And what does it mean for the deficit going forward? So people are looking at those IEEPA tariffs. Would they then go to, Section 301 or some of the other sections, which could take a long time to permutate and put into place, and he'd lose his edge in that situation. Then we go into the US government shutdown. Of course, a lot of people are focused on the idea that the longer the shutdown goes on for, it's going to subtract away from growth and those factors. But I think the real issue for me is actually more about what this means for the one big beautiful bill, because at the heart of this situation is the ACA, the Affordable Care Act, which is obviously where the subsidies, the enhanced subsidies, are due to roll off or expire by the end of the year. year. Now, the Democrats want to see those subsidies continue into 2026 and beyond. The Republicans obviously want to see that curtailed. Now, the savings that will come from the Republican Party and through the US economy are actually not that big. We're talking about $350 billion over 10 years, which seems a lot, but it's actually quite a punitive, a small amount over the course of time. But if we were to see the Republicans cave to the Democrats' demands so that we can get the government reopened again, what it would mean is it would have big implications for the One Big Beautiful Bill, because the Republicans are talking about, after the midterms, trying to put in place about $1 trillion of healthcare-related savings and cuts coming through. So if they can't get through the smaller $350 billion Affordable Care extensions, there's really no way that they're going to be able to get through $1 trillion worth of savings, which they were going to use to offset what we were going to see against some of the other spending initiatives through. And voila, you've got a situation where the tariffs are being used for stimulus and to buy votes. The IEEPA tariffs may not even be able to go through in the first place, and businesses would be asking for those tariffs back, so that could cause huge conjecture. And a lot of what we've been seeing going forward may not add up into that situation. And you've therefore got a deficit projection which could go up towards 8% of GDP. And I think that's the message that the gold market and the silver market and crypto is saying. We see this right now, that there's fiscal largesse, recklessness, the deficit projections are going up, and Trump is going to go away from that fiscal austerity kind of area and move towards a more expansive situation when the economy is already doing quite well. And I think they're sniffing out higher growth, higher inflation, and I think those debasement hedges, or that loss of confidence in money, is what the gold market's saying. Now, for me, that's fine. Equity likes that. But it's when the bond market doesn't see that's the situation. If the bond market starts to share that message that gold and silver and crypto is suggesting, the long end of the curve starts to rise, term premium starts to rise, I think that's the situation that could be quite a negative. So we're looking at the IEEPA tariff ruling. I think that's going to be a major event risk for the end of the year. I think if the market is really sniffing out that we're going to see higher debts and higher debt loads and deficits going forward because of these dynamics, and if the bond market, which I think is key to all of this, starts to sell off, we see steeper curves, long end yields moving up because they're sharing the same view that gold is, I think that's when the equity market starts to roll over and we start seeing dollar moves, and we're going to start seeing much higher volatility in market. It might not happen, but I think that's really the message that the gold market's saying right now. How high can this go? It can keep going if people believe these deficits are going to start getting out of control. It's the powerful message. I think it's exactly what we're seeing. But the bond market holds all the keys. Now, let me know how you're seeing this situation, because I think it's going to evolve. Trade at Pepperstone.